Good morning, Paul Georgie from Allendale. It's March 17th, 2010, St. Patrick's Day. Well, we've got grain markets expected to open higher here this morning. Corn 1 to 2, beans 1 to 2 higher, wheat steady to 1 higher. A lot of this support in the grains right now is coming from the outside markets. We got the dollar down 10 cents as we speak. Crude oil knocking on recent highs here at 82 cents higher as we speak, which is around the $83 area in the nearby contract. We got gold again $2 to $3 higher. So this is certainly providing some support. Outside markets or grain market news today. Weather, an issue that's continually being talked about. South American weather, we do have some wet areas where harvest is being delayed a little bit, but the crop down in South America continues to grow, and it continues to be a large crop. Now, there's talk in South America that's being supportive, even though we've got a big crop down there. The talk is of potential dock worker strike, potential farmer strike again, because they're unhappy with the tariffs that are being charged for their beans being shipped out of the country. That is potentially supportive here for the U.S. soybeans, at least initially. That is the South American issue is causing world buyers to come back to the U.S. and buy U.S. beans, even though the South American beans might be cheaper, because they know they're going to get them. The delays right now, and this is also a talk of delays of anywhere from 7 to 10 days in shipping, when normal rates would be 5 days. But when you look back in history, there's been times where there's been 30 days of delay in shipping. So not a big issue, but something that is being talked about as positive. Another thing that you may want to look at and monitor very closely is the soybean oil. The soybean oil is finding support because it has been tracking very closely to the crude oil numbers. So this is, with crude oil being higher, that's supporting the soybean oil, which in turn is giving the soybeans some strength. National Weather Service released yesterday its projected flooding problems here in the U.S. and showing a lot of potential for flooding in Iowa, Minnesota, North Dakota, South Dakota area because of the heavy snowpack up there. So that's a concern that we've got to monitor. And when you've got that problem, well, you're not going to get corn planted early when you've still got snow on the ground. So these are things that are supporting grain prices right now. But as they subside and we get closer to the 1st of April, the middle of April, farmers get in the field, things will change there. We also have the Allendale will be releasing their acreage survey numbers on Friday morning at 7:30. So stay tuned for that. The trade has been asking for those numbers here already, wanting to see what Allendale's got to say. So those numbers will be released Friday morning at 7:30. Then the USDA releases their numbers on March 31st at 7:30 a.m. So you get a head start on a look at what the U.S. farmer is suggesting they're going to be planting. Technically, corn, we've got resistance in May corn around the 369.70 range, and then again at 375, support at 360 to 59. We've been consolidating the last 4 or 5 days in this range. A breakout either way of that, either side of that range could give us the momentum to move sharply in that direction. So you've got to monitor that very closely. I would certainly expect that we've got a lot of stops building under that 359 area in the May corn. That could take us down to 350, maybe even 336, which is a low seen here some time ago. In the soybeans, support initially at 938, then again at 930, with the 911 target still is kind of the downside target that bears have in mind. But on the upside, we got resistance at 950, and then again at 960, 975, stair-stepped up. So we will need some fuel to keep that bullish fire going in the soybeans here in the near term. Wheat still in a trading range, resistance at the 490 to 510 range, support around 475 to 472 level in the May wheat contract. Over in the livestock trade, one of the exciting markets that we've got left that is bullish and very strongly bullish is the beef complex. We've got beef choice cutout value was up 162 again yesterday. That puts it at 152.82, which has been a huge hurdle for us to stay above this 150 area for some time. That's the highest cutout value that we've had in beef since April a year ago. The pork complex, not quite as exciting. Cutout values there were down 97 cents yesterday, dominated by the ham market. Hams came under tremendous pressure, down over $4.40 yesterday. Today's outlook is cash markets could be a little bit weaker, and the futures market has been technically damaged in the pork complex. So you've got a battle there where the cattle are very strong. Pork is under some pressure, and I think they're getting support and probably negative movement as they're both meats. But the cattle market looks very good and expects support to be provided on any kind of setbacks here. You probably want to trade it from the long side as the trend is up. From a hedger standpoint, though, we're looking at ways to protect these cattle at these price levels, because when you look at a long-term chart, they're at some pretty good levels, and some profits certainly can be made at the levels that we can lock cattle in here for the next several months. In the pork complex, be careful. Those of you that are bullish that market, we've got to maintain support here at anywhere from 50 to $1 lower. If we start taking out stops there on the downside, we could have a sharp break in the pork complex. If you got any questions, don't hesitate to give us a call. Again, as I said earlier, stay tuned here with us on Friday morning. We've got the Allendale survey results that'll be out at 7:30. If you got any questions, call us at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning.